Hey folks, and welcome to the Pipnotic Symposium for the 30th of June 2023. Today we're going to talk about something that came up from one of our members, Jakob, in the Discord, and he was talking about how you deal with deviations from a trading plan. And so I think this would be a really good topic to cover today. And I think deviating from a trading plan is a very common thing. And I think the more you deviate from it, the more you ignore what you're supposed to be doing and do things that you're maybe doing based on emotion, I think this will decrease the more mature of a trader you become. And this is completely normal. It just means that you're developing. And so if you are deviating, it just means you're developing and you're on your learning process. And as you continue down the path to becoming maybe more well acquainted with your process, and these deviations will occur less often. But they will never stop entirely. And this is also because when you spend a lot of time in front of the charts and you look at price, you'll start to get intuitions about how price will react at certain levels, and you have to allow for these intuitions to surface, and you have to allow yourself to act on these intuitions. As an example, some of these Aussie dollar long trades that I've been speaking about over the past week or so. I mean, I was quite confident about buying the Australian dollar, and so I felt intuitively that this is something that I wanted to start to do. And the reason I did this is because, I mean, looking at price, looking at the histogram, intuitively it was speaking to me like this. And that's okay. I wanted to take advantage of that intuition. And also you have to think about that as you develop as a trader, intuition or hunches to do things is also a way for you to kind of think a little bit outside of the box, where your trading plan will provide a framework that you can operate within, but there has to be space for experimentation, and there has to be space for following hunches, because these hunches are what you will eventually rely very heavily on based on your vast experience as a trader or looking at the charts or whatever. Okay, so I mean, you're not wrong for doing this. It just means that you're developing, and we're all developing still. Okay, so it's perfectly normal, and it's good that it's happening, because I feel personally that you learn more from your mistakes than you do from your successes. So this is a very important thing. And so first of all, in order to deviate from a trading plan, you have to know what your trading plan is. And some people feel that you have to have 17 steps for entering a trade. And for some people, that's perfectly fine. But for others, like myself, it's not necessarily how I operate. And we're all different. And so your trading plan might work for you, but it might not work for other people. And that's completely fine. The most important thing, I believe, is that you have a fundamental understanding of why it is that asset prices are moving higher and lower. And once you have this understanding of what's going on, you have this developing intuition for short-term movements in price. I think that this is a very good way to operate within. So you find your trading plan, which is based on how you perceive the market, which will typically, for us at least at Pipnotic, this means understanding how liquidity is distributed in a market and how this distribution of liquidity affects asset prices. And okay, this is super important. And on top of that, you can do whatever you like, but the foundation is super important to understand. Okay, so we're not looking at squiggly lines. We're not looking at colorful indicators to tell us what to do. We're looking at how price moves. Okay, this is super important. Okay, and for me, just to run through, I mean, my thought process is that, I mean, one of the main reasons I invented the histogram is because I wanted to see where prices would turn. Okay, it's a bit of it was a bit of an endeavor to do, but it turned out to be not that simple. Sorry, not that complicated. Okay, so we made this thing here, and so my trading plan is I want to buy assets that are in the buy zone, and I want to sell assets that are in the sell zone. So I'm looking to sell when prices are very high, and I'm looking to buy when prices are very low. Relative, and this vary high and low is relative to the time frame that I'm looking at. Okay, so that's step one in my trading plan. I need to know where I am. And we've been speaking a lot about the Australian dollar, and that's because a lot of the Australian dollar pairs have been very low. We have this one here. This is the Aussie Kiwi. I mean, we were quote unquote very low on the 4-hour chart. Okay, we were down here. Okay, so that was my expectation. The prices would move a little bit higher from here, from this area of demand that you can see marked off by the software. Okay, price poked into it, and we had a nice reaction. So this is step number one for me. Step number two is I want to see price move into an area and begin to show respect for that area. And so when I see something like this, let's just assume for a second that that area is around here, which I think it probably was. So prices come down to the area, and then we had a really sharp push into it, and then a departure, a move away from it, and then we form another high here, okay, which is tested, 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 and now it's removed. And the area that removed it is this. So when price does this, moves through this, essentially removing this area of supply, then I know that this histogram in the buy zone is qualified. And so what I'm going to do is I'm going to start to look for shorter term buys at an area that makes sense to me. And this will often be combined with the supply and demand software and the currency strength software that you can see here. Okay, so I have my trading plan is, the process is look for histogram trades, buy and sell zone trades, look for price to move into an area of historical supply and demand. Okay, this is what we want to see. And then on a smaller time frame, look for market structure to break. Okay, this is super important. And so it's super simple for me. And for me, the rest I leave for interpretation and intuition. Okay, and so I'm looking for things to happen on the chart that will lead me to believe that prices are going to move higher. Okay, and so I think what you need to do is you need to define a minimum of steps that you will almost never break, and these could be the pillars of your strategy. For example, I'm only going to buy assets that are in the buy zone, and I'm only going to sell assets in the sell zone, because that filter alone will really move the bar of quality for your trades up significantly. Okay, so doing that alone will really stack the odds in your favor. Okay, and this is a very easy one to adhere to. Okay, and next you want to maybe add something else that is very easy to adhere to, something that would not be outrageous to adhere to. Because if you have, it's like those books that they write, some of those mindset gurus, they have 27 steps to success. And you think, like, 27 steps, gosh, that's a lot of steps, and it's so easy to step out. It's so easy to break one of these rules. And so it's so easy for the people who create these frameworks to give you a reason why you did not succeed at it. I used your 27 steps, but I'm still not succeeding the way I want to. Did you follow all 27 steps? Well, actually, no. Step 17 didn't really fit because I have young children at home and I couldn't do this or that. Oh, that's why you're not succeeding. It's really, really easy to not to fit. So if you reduce if you reduce the number of steps in your trading plan, in your strategy, to some super core fundamental aspects of trading, liquidity, then it's really easy not to break those rules because there aren't 27 of them. So if you're just saying, if you're alone going to focus on one, I would focus on the histogram. Okay, wait to trade assets that are moving above the sell zone or moving below the buy zone, and only interact with those assets. Okay, that really, really helps. And you can also use the website, the dashboard. Okay, I have these here. Let me put a few more on here. So here I have all of these assets. This is the histogram running, it's running all the time. And so if I want to trade on, let's say, 4-hour buy and sell zones, then you simply order sort here like this, and then you go here and you say, cool, and these are all the ones, and I only have 1, 2, 3, 4, 5. I only have 6 assets that I'm allowed to trade today. All right, back. My youngest just booted the door down in a fit of rage, so I got a bit derailed. All right, so going back to this, that's the wrong one. Here, so going back to this, I mean, what we need to do is we need to focus on these assets here that are relevant to the time frames that we're using. So here, as I said, we have 1, 2, 3, 4, 5, 6. Okay, so we have 6 assets that we can look at. So let's go to the Aussie American dollar. Aussie American dollar. Take a look at that. Okay, so here we can see super clearly that we are in the buy zone, just like the dashboard is telling us. And so what we want to do in a situation like that is we want to begin to look for reasons to buy. And so this is just an example. I'm just going to put this down here for the time being, and I want to see prices to begin to break down. And you can see that happening here, how we had a really nice departure. So here we have the second step, which is market structure breaking down at the time where we are at demand, or we have and when we have the histogram in an area where it would make sense to buy. And I want to see it begin to break down on the smaller time frame. And so here we have downward sloping price action. We have demand that's formed. Okay, and so now you see this happening. Then you wait for prices to come down. You put your limit order on around here somewhere to buy, and you just wait for price to come there. I had a trade on the another Aussie pair where prices went up like this. They came down, formed this area like this. We went up, and then we started to move sideways. And I thought, well, I'd like to wait for price to come here. Prices were up here. I think maybe it was even a little bit lower down here somewhere. And so I put my order in. Then I waited. Actually, let me see if I can find that trade. Okay, here it is. It was the Aussie CAD. This one here, where prices came down, like so. Just do the most recent swings. And then we moved away. And then we started to just continuing. Oh, this is difficult. Going higher. And I thought, yeah, I mean, we have demand. We have price inefficiency. We have the buy zone. But essentially, we have demand. And so I said, I want to buy at demand. I want to buy at the best possible price. And so price came to it, and then it moves away. And this is really, really common behavior. And this was at a time when the histogram was doing this. And so I think that prices are going to continue to move higher. Okay, I don't know if we're going to get all the way up here, but I think we're probably going to get to about right here, because this is where prices kind of went to and turned. Here, you see here, we had this area here, which is really important. Tested a bunch of times, price cut through it. We went down to it, and then we left. Okay, so this is probably going to provide some kind of resistance for us in the future. So maybe if we get up there, we'll bounce around here somewhere and then continue lower. And the reason I think lower is because we traded below this low here. So I mean, I would be even happier if we did something like this. That'd been really nice if we reacted at some demand here, and now prices are kind of going like that. Then I would expect prices to run to these highs here, but this is not the case. So we have to be a little bit more careful. So this would require a little bit of patience and maybe a little bit more strict on the trade management. But I'm waiting for price to do this, and I did this based on this. Okay, so step number 1, the zone. Buy zone, buy. Sell zone, sell. Step number 2, find market structure and wait for price to break it. Market structure. Sorry, we have demand. Market structure. We have these highs. goes like that. Price breaks. We break. We come down. There's a little bit wide. This is during the night, so we didn't get filled. Price went away, but we had another go. Boom. And then we got filled, and now we're moving away. Okay, this is super normal behavior. So when you do it like this, it makes it so much easier just to leave stuff alone. Okay, also note that we have the waves that are taking place, and so we had, maybe the top of this was maybe here, the bottom of this was around here, and maybe the top here. So we're probably up for a pullback, a bit of a pullback, and then we'll start to move down here in the Aussie. Maybe the Aussie will come down, and then maybe be the end of the bear cycle, and then it'll continue to move higher, which is what we'll expect will happen in order for this trade to work out. Okay, but if you have 17 steps where I want the histogram to be here, I want that dot to be there, I want this to be happening and that to be happening, I want this line to cross that line. It's almost never going to happen because there are so many criteria that it's almost like a pie in the sky. But if you have few really important steps to follow, then your trading plan becomes much, much more simple. And if you have some general good additions to your trading plan, as an example, I don't want to trade on Fridays because that's when maybe some of the banks are screwing up their books and we have some volatility. I don't want to trade levels that were created during the Asian session. Then that's another one. Then these are very simple ones that you can also add. But at the same time, I would encourage you to try and trade areas of supply and demand that were created during the Asian session, because you need to interact with the market during these times when these things are happening. Otherwise, it's just a concept. Okay, and so as I said like several years ago in a video for FX Street, that I encouraged people to buy when prices were really, really high. So buy when prices are really, really high. We'll just use this example. Sell when prices are really, really low. So when price is down here, then you sell, and then you experience the agony of watching price come back, which is really common behavior. Obviously, when we have a really sharp sell-off in price, we would expect prices to pull back. So you have to interact with the market at these price patterns, at these times when there's a very high likelihood for prices to fail, so that you have this negative neuro association with selling when prices have run lower or buying when prices have run high, because the end result is going to support your behavior in the future. Okay, so just try and keep it as simple as possible. And if you have a trading plan and you want others to look at it, you can put it in the Discord channel and we can all look at it and give you a bit of feedback. Everyone in the room is very sweet. They're very gracious. They're very kind. Very well informed. So I think you'll get a lot of really, really good feedback from everybody in the room. So put it in there. Let everyone scrutinize it. That would be a really, really good way to get some really nice feedback that might be quite beneficial for your process and for your trading plan. It's almost like open source software. I used to do a lot of open source projects, and you would create something and you put it out in the public domain, and you know what I mean? It's kind of overwhelming at times because you've created something that is your baby, and you put it in the public space where it can be scrutinized by people who are, at least for me, people who are better programmers than I, and then you're humbled, which is a very, very beautiful thing. I really, really liked doing that. There was a guy from Portugal once. I used to do these things called crack me's, which were these small computer, like reverse engineering challenges written in assembler, and I would post them to these websites where people would try to complete my challenges. And there was this guy from Portugal who was really, really, really good, and he would always give me the best feedback that would enable me to improve the quality of my challenges. So I recommend putting stuff out there. Put your ego aside, throw it away. It serves you no good, and consider yourself the eternal student. If you are an eternal student, then you will always allow yourself to learn new things. This is super, super important. So give it a shot. If you have any questions, please let me know, drop them in the Discord or shoot me an email. And I hope this was useful. And thank you all so much for watching.